Welcome to Smart Wealth Radio. This is Dave Altmaier and Steve Minnick. Well, Steve's not here with us today. He is off to a conference. But today we have a special guest with us, the Silver Guru himself, internationally well known, and he lives right here in the Inland Empire. And I just want to welcome David Morgan.
Well, Dave, thanks for having me back. It's a pleasure to be here.
Yeah, good to have you. So there's a lot of things going on in the news and that affects the markets and that sort of thing, and we'll be, touching on those things today.
I look forward to it.
Yeah. David, I got this article today out of Market Watch, and it's an opinion letter from Goldman Sachs, and the opinion, it's titled, "Why Gold Has Utterly Failed as a Safe Haven." And it talks about the reason it brought it up is because there was a rally in the market last week when the stock market went down. And basically what he's saying is gold has lost 23% of its value during the 1980s and 29% of its values in the 1990s.
Well, it's all very interesting. And, there's probably as much opinion around gold as there is anything in life. In fact, the gold situation is something that very few people understand in depth. And I'll attempt to counterbalance the Goldman Sachs argument. Mm-hmm. First of all, let's start with facts. The fact is that gold is the most negatively correlated asset to the stock market. And that's provable on a gold standard or not. But in the current times, he wrote in the article something to the effect that, the gold standard ended in 73. Actually, it was closed August 15th, 1971. Not that I want to split hairs. But that the idea being that, anything past that date's invalid. I would absolutely beg to differ with him from the fact that we went off the gold standard on a gold coin standard or a true gold standard during the Roosevelt administration. And it was only for settlement in international situations from that point forward. In fact, it was illegal for U.S. citizens to own gold during the Roosevelt administration. So,
right, I'll add, which is an interesting point about that if he told everybody to turn the gold in, he gave the price, and if you didn't turn it in, you'd go to prison for 10 years.
And then they revalued gold. So
doubled it in the next year, which helped the Treasury out.
Yeah, 75%. Mm-hmm. But you're right, roughly, you could say double, roughly. So that's point number one. Point number two is, if you look at gold and study it in any kind of less than a very cursory manner, or you form your own opinion, which requires some research, what you'll determine is that gold is an element. Gold is a number on a periodic chart. Gold has these certain qualities. But to sum it up and to try and be very concise, if you read The Golden Constant by Professor Roy S. Jastrom, what you'll determine is a couple of things. Gold is a constant. The mass of gold is the same anywhere in the universe for all time. So it's something that people can hold on to that is constant. So what varies? What varies is what is the price of gold at any point in time. And his argument about the stock market is one I really like to pick apart because it can be understood by almost anybody in a very short time frame. Uh-huh. If at the founding of the Federal Reserve in 1913, you had a very, very wealthy uncle, and he gave you $1 million in currency, today in 2016, you would have $1 million in currency. But if you took that currency and at the time was able to convert it into gold coin, which you could at that time, this is prior to the Roosevelt we just talked about, you would have roughly in fiat today $48 million. But then you're going to get guys like this from Goldman Sachs. They're going to throw up their hands, they're going to run all around the room, and they're going to scream that, you should be in the stock market. Well, if you take the Dow Jones Industrial Average, this is cherry picking the best stocks. See, gold's a constant. Remember, it's one thing, it hasn't changed. And yet it'd be worth 48 million in fiat today. But if we cherry pick the best companies, make up the best 30 stocks all the way from 1913 till now, which has changed several times, you're still going to have a factor of about 22 million. So gold, this thing that most people want to claim doesn't do anything except sit there and be itself, actually outperformed the stock market about 2 to 1.
Yeah. Yeah, I've heard. I remember reading an article after 2008, and it said, gold went down just as much as the stock market, and it doesn't provide anything like a dividend. And the thing they didn't mention is they wrote the article too soon because gold took off after that. And like we've talked before, when the market goes down, there's a lag, and then it goes up. So if you're concerned today about the stock market or where your money's at, give us a call at 32SMART and schedule a time to come in and get a free diagnosis. So when we get back, we want to continue our conversation on this article and some other things that are happening in the world today.
Great. Thank you.
Back after the break.
Greg and Ann talking about their experience working with True Wealth Financial and Altmeyer Strategies.
I'm a physician. We've lived in Spokane for the better part of 30 years. My wife, Ann, and I both work. We're in our late 50s. We wanted to look at some options that kind of eliminate some of the whims of the stock market. Primarily trying to mitigate risk.
The part that's invested with the program that Dave actually talked about is dependable, and that feels nice. I absolutely would recommend talking to these guys.
I've already referred a coworker and a friend to Dave and Steve, so I'm very comfortable suggesting that other people see them, primarily because I think they'll have the same experience we did.
Thank you, Greg and Ann. We appreciate your kind words. If you have any questions about retirement, call us today, 32SMART. That's 327-6278, and find out what Dave and I can do for you. True Wealth Financial, 327-6278.
Welcome back to Smart Wealth Radio with Dave Altmeyer here, and my co-host today is David Morgan. Good to have you here, David, and we'll continue our conversation from the break on this article.
Very good. Looking forward to it.
So we were going over this Goldman Sachs article, and they were talking about gold doesn't have any value. And, it was interesting. I read an article, it was about a year ago. And European aristocrats, the three things that they invest in their money in, because when they're looking at 50 years, generation to generation, they put it in land is one. The other thing is gold and art.
Yeah, it's very interesting. I mean, this article from Goldman Sachs, he can write whatever he wants. It's a free market, and free thought, I think, is extremely important. But it depends where you put the starting line. Look, you can make a case that gold has been a lousy performer for 4 years, and I'll lead the charge on that. It has been relative to the stock market or its U.S. dollar price. If you look at other currencies, it hasn't done that bad. So we have to take kind of a broad view and really look at it from a more objective perspective. But if you look at it as like a short-term thing, it certainly can be. You can trade gold as a commodity in most parlance. That's what it's considered to be. But from the long-term generational wealth that you asked about, Dave, it's really important that people that really understand and get it, and I put get it in quotation marks, get the monetary system, get what debasement of currency means, get the long run, get how the banking system operates. They really get it. They get money, in other words. What do they get? They get gold. What else do they get? They get land. And what else do they get? Well, they get art. And this is something that isn't taught in school. You're never really brought along to understand what fractional reserve banking means. You're not really taught about how a loan is created. You're not taught any of this stuff. And these are things that, unless you have an interest in it and really take the time to study it, most people are very naive about. And so the mainstream financial markets really have one job, and that is to sell stocks and bonds. And that's what they advocate almost always in the public domain and in these type of public articles. Now, if you are very, very wealthy, one of those that we talked about, generational wealth, and you go to one of those brokers and they put you behind closed doors, guess what? They'll allocate gold in your portfolio. In fact, it's so well known by the financial markets that study this stuff at, let's say, the level that a professional does, that you would know the Ibbotson study has shown independently that for portfolio analysis, that having metal, not mining stocks, but metal in your portfolio does better under all conditions. So this is something I can point to. You can look it up, Google the Ibsen study. You can look at my work. I've done several videos on it over time. And these are things, again, that are not well known or well recognized by the general public. And does that mean that, everybody's got to run out and buy gold? The answer is no. It doesn't really suit everyone. But for those that understand and have the capability to do so, I would certainly advocate that they get better educated about the monetary system. And for those that maybe gold is too high priced, you might consider the alternative, which is the younger brother of gold, and that's, of course, the silver market, which is something that I've studied for better than 4 decades. And certainly I'm not a know-it-all in that matter, but I have studied it significantly, and I'm always learning more in the markets in general.
You kind of referenced that perhaps Goldman Sachs kind of could double speak, and I don't think that they've ever done that in their history. If you look at the mortgage-backed securities, they sold mortgage-backed securities to their clients, and then they went over as a firm and shorted it and made a ton of money. So it's kind of interesting in the movie The Big Short. I don't know if you've seen it yet.
I'll interject. Yeah, I watched it twice. In fact, I actually bought the movie. I haven't received it yet because Amazon won't sell until, out of time. But and I don't want to take over the conversation, but get me very excited.
No, that's all right. Good.
Well, the thing is that, there are people that saw it coming. I was one of them. In fact, I put up an article in the public domain that I used to do much more frequently. Now I mostly stick to either radio interviews or podcasts or videos. But in the early days when I was writing avidly for the public domain, I put up an article about the real estate market and how it was at the top and that it'd be good to move into gold and that type of an article. And I got some really positive feedback. I got one gentleman that said, "Wow, I am so happy that you explained this. I really know what to do." Now, whether or not he took action or not, I don't know. Yeah. I'll assume that he did. But this was something that the guys at The Big Short in that movie, and of course I identified with many of them, and I guess probably most the Brad Pitt character. Not that I worked on Wall Street. I want to make that clear. People, you were a trader on Wall Street. I was not. No, but I identified.
I'll interject one thing. My assistant went to it, and she said the whole time, "He sounds just like my boss."
Well, I identify with all the characters on the short side, but that one, I think, because almost to the point of where I feel the system is so broken at this point that I don't know if anything can be done really to change the course. Perhaps so. I won't give up. I'm not throwing in the towel, but definitely think, he says about, I think, seeds being the next currency or something like that. And I'm not saying that. What I am saying is that we've gone down this path to destruction of the currency quite a very long ways. And I can back that up. And I think most people that listen to a show like Smart Wealth really, really get it or are getting it right now.
Yeah, it's interesting because even if I look at all the presidential candidates out there, I mean, the only one I think would not bail out the banks the next time would be Bernie Sanders, and he would take 95% of what you got anyway. So,
yeah, well said. I try to stay out of the political juncture, and that's okay. I mean, I can be drawn in, but I was asked about Trump, and I said, I like the fact that he speaks his mind and that he doesn't back down from this political correctness, which is another thing in my strong opinion is ruining this country. But they said, what about him? I said, I want to look at principles, not personality. He's a very colorful personality, and I get that, and many of the candidates are.
Yeah.
But is he going to really go by the strict law of the land? Is he going to go by the Constitution? Or is he going to not? And that's what I want to know. I want to know what are the principles that will be implemented. Or the personalities are fun. Yeah. You talk about his hair, you can do this and that. I don't really care about that. What I care about is what are the principles that are driving a given candidate. And in my strong opinion, again, and I have many, but that's one of the reasons I get asked on shows like yours, is because I don't think it makes a whit when it comes down to it. It might sound good. It might look good. It might seem like he's confronting the establishment. But when it comes down to, are the bankers still in charge or not? I agree with you, Dave. They probably still are in charge.
Well, I mean, he built his empire off banks and real estate. That's why you question. one thing, I was turning the dial and I heard this local talk show, I won't say what it is, last night, and he goes, nobody that ever calls in here can ever tell me why anybody is behind Donald Trump. Nobody can give me a reason. And to me, it's real simple. It's like this. People are ticked off and they're going to stick it to the establishment. That's basically it, why they're behind him. But I'm not saying I'm supporting him. We're not going there, but it's just having a broader view of things. So back to currency and gold and silver. I've read in the last year quite a bit on digital money, and there's a real possibility of having digital money, and they'll use it in the name of, keeping out terrorism and corruption and stuff like that. But the articles I read, whatever country uses digital money, it will still be backed by gold because something has to back it. And the other question is, why is China buying so much gold? As soon as we come back, David's going to answer those questions.
If you have some questions about your upcoming retirement or are not sure you are prepared for retirement, please give Steve or Dave a call. They can help answer your questions and provide a free consultation about your retirement preparedness. To set up a meeting time with Dave or Steve, call 32SMART. That's 327-6278.
Welcome back to Smart Wealth Radio with Altmaier and Minnick. This is Dave Altmaier, and Steve is at a conference up in Vancouver, BC. If you have any questions or you want a free review, please give me a call at 32SMART, and we can schedule a time to get together and go over whatever you have. So we left a message with our guests here, special guest David Morgan, and the two questions that I brought up was digital money. What's the possibility of that? Will it be backed by gold? And then why is China buying so much gold?
Okay, great.
All right.
Well, I'm going to take the easier of the two right now, and that's the gold China question. If you look at monetary history, what you'll find is that the most productive countries are the ones that end up with the most gold. And that was true during the British Empire. I mean, when the old adage that the sun never set on the British Empire, they basically had the ruling status or the elite status or the higher status, whatever you want to frame it, on the global system, and it had the most gold. So they also controlled a lot of the productive capacity of the planet. That eventually started to wane, and the United States started to come up. And then the United States ended up with the most gold and the most productive capacity on the planet. So today, what we're witnessing and have witnessed for quite some time, especially from, let's say, the early 2000s till present day, is that China has produced the most. They're considered to be, from the official records, either the number one or number two economy in the world. And simultaneously, they have been getting the gold supply into their vaults at a steady pace. And the alternative press, myself included, believe that the amount of gold that is in the vaults in China is far greater than what is reported by the mainstream. And I want to back up there and drill down slightly, and that is
the communist China announces that they have.
Right. And, they're legally minded like many, which means that when they say, well, how much gold do you have? Well, it's like saying, how much gold do you have in this vault? And they're reporting that. But the mainstream reports it as China reports they have this much gold. When if you look at it like a legal person would, then all they're reporting is what you asked for.
Yeah.
You didn't ask for what's the total of the People's Bank of China, or what is the total in all vaults in China that are mandated by the government or not. I mean, you didn't ask the right question, in other words. So they're reporting
I didn't know they
had
attorneys in China.
There are a few. So that's the first question. The second one could go about three different ways. So I'll try to break it down. First of all, on the digital currency from the bank perspective, so I'll answer that one from this viewpoint. The idea that all money has been formed into some kind of electronic base is true. I mean, the bank account that you have, Dave, that I have, that anyone has in the U.S. generally is just a memory in a computer.
Right.
Yes, you can go to an ATM, and yes, you can get, hard currency, you can get, green pieces of paper in the U.S. or different colored currencies in other jurisdictions. But the point is, for the most part, everything is just basically a memory on a computer. So the idea about the digital-only currency is that you would have the inability to go to an ATM and get out a green piece of paper anymore. It would all be cashless. You would only be in the system of the computer bank, and you would have no alternative. And the reason for that is, one, there couldn't really be a bank run that way. Because it would all be internal to the bank, and you wouldn't have any alternative you could go to. Now, the other question you asked takes a different perspective on the term digital currency altogether, and that is an alternative digital currency, such as, let's say, Bitcoin, the one that most people are familiar with. And in the case of Bitcoin, I wrote an article, and you can Google it. David Morgan writes about Bitcoin. You'll probably find the article. What I said is, from a personal perspective, I'm not that favorable to Bitcoin. But from a free market thinker approach, I am going to let the free market determine, because I am not going to say that I know more than the market. I don't. I would say if the market determines that Bitcoin is like the best alternative or the best overall or whatever the market determines, I'm not going to fight the market. I'm going to say, fine, that's what the market decided. My personal opinion can stay with me. It doesn't mean very much.
Now, I have a question along that, because the one thing I've read about Bitcoin is that the black market uses it like ISIS. Is that true, or have you?
Currency's currency. I mean,
yeah.
One of the arguments about not being able to go to an ATM and getting greenbacks is, the drug situation. Well, this is ridiculous and preposterous, because first of all, if you go into the alternative media very deep, you can determine a lot of the drugs that are on a large scale come from entities that are, let's say, purported to be on the up and up, and they're not. Secondly, that it's gone on for massively a long time, and now all of a sudden they're going to shut down, greenbacks or, yuan or whatever, because it's going to help the situation. No, it's for one reason only, and that's to protect the banks against the people. That's what it's for.
Yes.
As far as the digital currency, coming back on that modality, a gold or silver-backed digital currency, I think, would be a great alternative, and you see some of it, but it's not well known or widespread. Certainly Bitcoin's sort of the leader in that genre right now, and it's not backed by anything other than the limited ability to make them, and there is a limit to it. So my favorable opinion would be that you could take the current system, digital or non-digital, and trade it for real wealth that stood the test of time. We talked about generational wealth, and you could put away, gold or silver coins or both, and that's basically outside the system, known to be money for thousands of years. And you can do it again. You can do it with just having a digital-only account. And I think that's one thing that the bankers really haven't thought through. The more that they put restrictions on quote unquote your money, which the bank considers to be their money, just wait for the bail-ins to take place. Then you're really going to get some phone calls. That is what they're looking toward. They're looking out into the future of what they can do to restrict the people's ability to get to their money.
Right. So I was reading an article about a week ago, and it was an interview that Stuart Varney gave to President Obama's former budget director. Kind of interesting. Stuart Varney saying, well, the solution to all this is to lower tax brackets like Reagan, and you'll have the second most booming economy that we've seen. And the other guy comes back and he says, well, or we can raise taxes like Clinton did and had the most booming economy we have. But the ex-budget director said, really the issue here is how do we help China and Europe come to a soft landing in their economy so it doesn't send us into a depression? So, David, what's your view of that?
Well, my view is that China has posted worse than expected January trade figures. In fact, their exports were down about 11.2%, and their imports plunged 18.8%.
And they were expecting something like 1.2, not 11.2 or something.
So obviously they are underperforming what you would need in a robust or growing economy. So it's something that should be a concern to everybody as the number 2 or perhaps even number 1 productive economy on the planet right now.
Okay, well, we'll take this short break and be back in a moment.
It can be difficult to know the best way to manage your wealth. Hi, I'm Steve, co-host of Smart Wealth Radio with Altmeyer and Minnick. I help my clients relieve the stress over growing and protecting their wealth. Frank and Joella are so happy they wanted to share their story.
We lost a fair amount of money in the stock market. For us, we lost about half of what we had saved. Now, granted, we did get most of that back over the years, but at 65, we thought there's no way we have the earning capacity to replenish that. So we found Steve.
We've been relaxed because what he showed us and presented to us is really a no-risk deal.
Frank and Joella, thank you for your kind words. Call me today, 509-32-SMART. That's 327-6278. Helping you to be smart about the health of your wealth.
Welcome back to Smart Wealth Radio. This is your host, Dave Altmeyer, and we have our special guest here today that's helping me host the show, David Morgan. And if you have any questions or want a review of things, give me a call at 32SMART. That's 32SMART. So, David, we're talking about the economy and several things. One of the things we've noticed is the price of gas has come down. I never thought we'd see gasoline under $2 again. And there's some, positive things from that.
Well, there are. I mean, there's really the most important commodity of all is oil. I mean, energy drives everything. So whether it's, oil or coal or uranium or something that drives the electrical market, electricity, or transportation, which is mostly oil, energy is key. Without energy, nothing happens. And because energy is so vital to the productive capacity of the human species, you have got to look at it very, very carefully. And because we have seen this huge drop in oil prices, it's been a boon to many in several ways, mostly for the man on the street.
Right.
Which means, you lower cost to, drive around. Transportation is less.
Right.
You look at the mining industry. I'm going to go move it from the small to the large for a minute. So from the mining industry perspective, generally speaking, whenever I do a broad brush, you can find individual cases that don't match. But it's generally about 25% of total cost. So if you're mining gold or you're mining lithium or you're mining iron ore, basically 25% of your costs come from energy. So if those have dropped from $80 a barrel to $27 a barrel, obviously you've got a greater margin than what you had before because your energy costs have been lowered so significantly. And that's across the board for anything that's manufactured that needs to be transported either by sea, air, rail, or automobile truck. So this is a positive, if you want to think of it in those terms. Right. But if you go out, or backwards rather, a few years, and you look at like the fracking industry, we were at the margin there, which means that you were getting oil that was, again, broad brush strokes here, but say $80 per barrel.
Right.
And there was a lot of financing done at those levels where investors thought that they were making a good investment because oil is going to continue to go up in price and the margin would be greater and you get a return on your investment and these loans would be paid off. Well, if that's all gone in the tank.
In fact, I read there's a big, huge graveyard of driller rigs down in Dallas. They said it's unbelievable. You just look out on this field and they're just all over the place.
And Alberta, Canada. I mean, a lot of what we do is in Canada. Alberta has been devastated. It has to do with the oil industry at large. And so, it swings both ways.
Yeah.
So the idea is that even like in some food costs are down because the petrochemical situation is very much dependent for the way we grow food these days, which means that if it's less costly, you can grow food cheaper. What needs to be pointed out, and very, very few people are cognizant of this fact, is that it takes 10 calories of energy to produce 1 calorie of food. Now, if you can extrapolate that in your head, and it doesn't take a rocket scientist, you can see that we're very, very energy dependent for our food supply. So even though we have an abundance of energy right now, and the abundance is really in excess of about 1 million barrels a day, 1 million isn't a very big number in this world of trillions of dollars of debt, isn't a real wide margin. In other words, it's not like we're, in happy times for the next, decade or decades. So these are questions that very few people consider, but I want to come full circle to the whole commodity cycle and put oil in its place. It's the top tier. But the commodity cycle, I think, is going to be waning. I think it's going down. I think we're looking at more of a depressive type of economy. I think it's contracting, not expanding. But because of those conditions, you will see the precious metals actually rise against the tide. And the reason is the uncertainty of the global financial system, the uncertainty of the marketplace, the uncertainty of what oil is going to be in the future, the uncertainty of what housing prices will be, the uncertainty of what the employment picture will look like. Fill in the blank, the uncertainty of blank. Because of that, people strive for something that, one, they can trust, and two, there's something certain about it. An ounce of gold is an ounce of gold, an ounce of silver is an ounce of silver. There's a certainty about that. What is its value in the marketplace is to be determined. But in times of uncertainty, they usually at least hold their value or go up in value. And since they've been in such a long downtrend, 4 years, which isn't long from a long-term perspective, but from a short-term perspective, obviously 4 years is 4 years, they are bottoming, or I think have actually bottomed. And as we talked at the beginning of the show, when we put it in the perspective of what gold does versus the stock market, and people are uncertain about the stock market, their pension plans, their savings in the bank, will they be able to get to their savings in the bank? Are bail-ins a real problem or not? These type of issues, I see more and more people rush to certainty or something in trust, and the precious metals are the only quote-unquote commodities that are money at certain points in time. I did a show recently with a very good thinker. He's a floor trader, and we've become kind of fast friends, and he didn't argue with me. We had a great discussion, and I certainly don't mind being challenged. And he said, I've always looked at gold as a commodity, and as far as I'm concerned, it's still a commodity. And I said, no. In my opinion, it's a commodity at a lot of times during, the historical framework, but at other times it is money pure and simple because it has to perform something that nothing else will. We are in those days, have been in those days for quite some time. So that's the way I see it.
It's interesting. We were talking about oil and the financing of the frackers. And like you said, they went out, the frackers, and at $80, they thought it was going to go to $100, $150 a barrel. And so they got financed by all these junk bonds. And since the beginning of the year, there's starting to be defaults on those. And I think we're going to, based on what I read, we're going to see a lot more of them coming in because oil right now is, so cheap. So that's the negative side to it as well.
Absolutely. I mean, if you want to put it in the context of the subprime mortgage situation, and that, basically is one of the main drivers in, the movie The Big Short, obviously a little side note here, but the collapse of Lehman and what took place during the financial collapse of 2008, it was primarily the subprime mortgage market. Now we have the subprime oil derivatives market, if you will. And is it as big as the housing market? The answer is no. But what we do know for a fact, I had Chris Martinson on one of my programs, and he put it in the context of how much oil is in the ground in the whole fracking industry and how much they owe in oil, and the debt is greater than the amount of oil they have. So not putting it in dollar terms, not putting it on an interest rate, not putting it into any term, but in a, as A equals A situation as you can, the amount of oil that they have borrowed on is much greater than the oil that they can pay back.
Also, we want to talk about some other things that affect gold and silver and precious metals. So we'll talk about that when we get back. And if you'd like to get a Smart Wealth free diagnosis, give me a call at 32-SMART. and we can arrange a time for you to come into the office and we can chat. So we'll be right back after this message.
Elaine Hoskin has been a longtime client of Altmeyer Financial Strategies. Here's Elaine to tell her story.
Well, I met Dave when I first came to town, and Dave worked with my first employer, with the executives there as an investment advisor, and I continued that relationship after I left that company because Dave had done a great job in sitting down with me and listening to where I was in my life and understanding my life circumstance with, my children, my husband, and my age at that time, and the funds that I would have available to me that would be coming out of 401k money because I was moving from an employer. And I didn't necessarily want just to roll it into another 401k and make all those independent investment choices myself. I mean, it's great to have tons and tons of funds available to you, but when you don't have somebody there kind of really telling you what they're all about, it can be difficult even for somebody who has a career in financial services like myself. So it was really helpful to have Dave sit down with me and listen to that and help me to lay out an investment strategy that would make sense with my goals and my dreams, if you will. We older people still have those, and my hopes for my children. And from time to time, we would meet, and we would review what was going on in my investment portfolio. And there were times, though, that Dave would proactively reach out to me. About every time Dave has come to me, it's turned out really well. So, knock wood. Thus far with Dave, 15 years, it's gone really, really well. And he listens well, and he is very responsive to the needs that I outlined.
Thanks, Elaine, for those kind words. Learn more about True Wealth Financial and Altmeyer Financial Strategies. Call now, 509-32-SMART. That's 327-6278.
Welcome back to Smart Wealth Radio with your host, Dave Altmeyer, and our special guest today in the studio, David Morgan, the Silver Guru. And we've been talking about the markets and the effects of silver and gold. One of those things I'm reading this article that came out today that there are 350,000 soldiers, 20,000 tanks, 2,500 war planes, 460 military helicopters are massing in northern Saudi Arabia for a military exercise that is being called Northern Thunder, and it includes Saudi Arabia, United Arab Emirates, Egypt, Jordan, Bahrain, Sudan, Kuwait, Morocco, Pakistan, Tunisia, Oman, Qatar, and Malaysia. And they're having an 18-day exercise, and what some people fear is what they're going to do, David, is they're going to march across Iraq. This is a perfect excuse. March across Iraq and go into Syria and take out Assad and support their ally there, ISIS, and get rid of him. And they say Obama won't say anything. I'm not saying that that's going to happen. This is just what this article is saying. It's a kind of an interesting thought that there's that many Arab countries getting together.
Well, it's great to point it out. It's a topic that we can't ignore. It's certainly very, very significant. The war drums toward World War III are certainly pounding, and some would argue that they're already there.
Yeah.
It brings to my mind, I'm going to digress here, beware the Ides of March. What does that mean? What it means is anytime I hear the word exercise, the hair on the back of my neck stands up. Why? Because we have seen, an exercise during the 9/11 attack. We saw an exercise going on in London when they had the subway problem. We've seen these exercises again and again when something that is very similar to or almost exactly like the exercise takes place for real, and the people that are performing the exercise don't know which is which. And so that concerns me.
Yeah, that's a good point. And they go on to say if this happened, Turkey would join them, and so then you got Russia on the other side. And that's where it gets real messy. And that's where actually the title was World War III, ?
Appropriate title, as we both know. And again, this is something that we have to really pay very close attention to. And it's something that is part of the mandate of the global power elite. I mean, this, and unfortunately, I don't really like saying these words, but it needs to be said. I mean, there's no reason to ever back down from the truth. Mm-hmm. And that means that we have a death and debt paradigm. Basically, what has run the system for a very long time is the banking system / the war machine. Mm-hmm. I mean, Dwight David Eisenhower said in his closing speech, beware the military-industrial complex. He knew full well at that time and was warning the American people that what had taken place through industry was this war machine. And that in order for it to prosper, you have to have demand. Well, how do you get demand for elements of war? You have war. Yep. And more war and more war and bigger war and different war and ground war and air war and sea war and on it goes. And unfortunately, this is a huge blight on the human condition because most people, and I've traveled the world, I certainly have not met everyone, but I can speak with some experience that most people, no matter where they are on the globe, really want to do two things. They want to care for their family and they just want to be left alone.
Yeah.
And the leaders, quote unquote, and I put quotations around leaders because they're not leaders. These are rulers. Demand certain things for something they covet, like a resource or a contract or a certain kind of banking system to be implemented in a country that may not have that type of banking system.
Right.
And so this is what's been driving the planet for way too long. And to recognize it is one thing. To do something about it is entirely something else.
Yeah.
And that's where it's very difficult to change the status quo. But I fear that we are going to escalate in the war front on a global basis. And really, what good is going to come from it?
Well, and it's well documented that the Rothschilds have financed both sides of a war, the same war. And when they got real nervous was World War II, was when they thought maybe Hitler would win. And that would crumble their empire. I shouldn't say little; it is massive. But very, very interesting. Another topic is the Fed's going to make a decision in the next few days to raise interest rates or not. And I was on a call last night with a person. Before he went private, he manage billions of dollars each day. And he said, basically, we're kind of doomed either way because he said he believes that they're going to raise interest rates and that's going to slow the economy. Or if they don't raise interest rates, then the market will go down because people will go, okay, why didn't they raise interest rates like they said they were going to do? Is there something hidden going on? And he believes that they're going to raise it because they need that ability to lower it later on.
Very interesting points.
Yeah.
First of all, I agree with the most important point, which is they're doomed. No matter which way they go. If they raise interest rates, they're doomed. If they lower interest rates, even go to negative interest rates, they're doomed. You can't solve a debt problem with more debt, regardless of the price of the money. I mean, interest is the price of the money. That's what it's about. Money is a commodity like potatoes, and interest is what you pay for that commodity. So I have a different view than many, and I think I'm alone, and I doubt it, but I look at the raising the interest rates much differently, and I wrote about this in the Morgan Report for the January issue in the editorial section. And that is the reason that interest rates are being raised is, one, to support the banking system, and two, to make the dollar look a lot better than it is. Because if you look at the data, and my friend Hugo Salinas Price in Mexico did a great job of this recently in an article that he wrote, is you had roughly $1 trillion get out of the U.S. bond market, and yet interest rates didn't fluctuate at all. Now, in a real free market, any supply and demand situation, especially when you had a big sell order like that, would drive interest rates higher because someone would have to pay to take that stuff. But it didn't change, which shows you again how manipulated these markets are. It was probably done through the Exchange Stabilization Fund. And I'm not trying to talk over anybody on the radio that's listening's head. What I'm trying to do is make a point, and here it is. The reason interest rates are going to probably continue up, and most of my peer group disagree with me is to make the dollar look good to those people that want to bail out of it. Because if all the other interest rates are negative or zero and the dollar is actually paying a yield, they're less likely to move out of the dollar. I think that's the main reason behind it. Now, again, I'm pretty much alone in that viewpoint.
Yeah.
I wrote about it in the Morgan Report, and I also went on to explain at some point, and it could have already happened, I doubt it, that it doesn't matter, that you're going to bail out of the dollar regardless. And once that happens, be it at this current interest rate, a higher interest rate, or even a lower interest rate, the interest rate isn't the point. The point is that I've had it. I don't want it. I don't need it. I need to get out of it. I'm going to something that's certain. Well, there's only so much gold and silver in the world. Not everyone is going to rush in there. I'll make that very, very clear. 1% of the world's population, and actually it's much less than that, is actually in the markets, the gold and silver markets. So if only another 1% woke up to the fact that, you know what, those guys are right. Generational wealth is land, it's gold and silver, and it's art. And another 1% of the 7 billion people on the planet decide, you know, I better get some. Look, all heck would break loose because it's that tiny a market.
Well, that's interesting. The other thing he said was kind of interesting too, is if the market, if interest rates climb, that when they need to lower it later on, all of a sudden people start feeling positive, like, oh, now I can get that bigger house. And he said, then people go start making stupid decisions, buying bigger houses and stuff like that, whatever. But it's the psychological part when things really get bad that it kind of they'll try to get, you know, the bottom line is for the economy to expand, consumers have to spend money. And that's, you know, that's what has to happen. So.
And that's exactly right. It's our economy is based on 70% consumption. Now think about that. You know, it's just like going back to the earlier discussion about, you know, it takes 10 calories of energy to produce 1 calorie of food. Well, if you have a 70% consumption, just take yourself as a thought experiment and say, I grow my own food. I have no external input. So when I grow food for the year, I hopefully can save 50%. Because if I have a bad year the next year and I have a blight or don't get rain or the crows eat it all or something, I'm only going to live a year. So I have to save. I have to have savings. So if you save half and eat half, you could go another year. But if you are consuming 70%, you've only got 30% left. Your savings will not sustain you. So I want to make that idea that we cannot consume our ways into prosperity. You get it? If you're consuming 10% and saving 90%, or consuming 20% and saving 80%, now you have a savings rate that can sustain further development. But when you're consuming 70%, how much is left over for savings? Not much.
More after the break.
Dr. Jim Goff talking about his experience working with True Wealth Financial and Altmeyer Strategies.
Hi, I'm Jim. I am a physician here in Spokane with Rockwood Clinic. Well, I first met Dave early on when I first came to Spokane. He's very knowledgeable about his business, and he is patient and willing to do things on your time and not on his. Probably most would agree that some diversification across maybe several different types of products or approaches is appropriate. And I would certainly recommend Dave to my colleagues, friends, to at least take a look and see what he has that might help them in retirement planning.
Dr. Goff, thank you for your kind words. This is Steve Minnick. If you have questions about your retirement and want to get off the Wall Street roller coaster, call me at 32SMART. That's 327-6278, and find out what we can do for you. True Wealth Financial, 327-6278.
If you have some questions about your upcoming retirement or are not sure you are prepared for retirement, please give Steve or Dave a call. They can help answer your questions and provide a free consultation about your retirement preparedness. To set up a meeting time with Dave or Steve, call 32SMART. That's 327-6278.
Welcome back to Smart Wealth Radio. This is Dave Altmeyer, your host today. And we have special guest David Morgan here. And David, we've been talking about several topics on the economy, and you've studied the economy and markets all your life. Is there anything new out there that you've learned or come across lately?
Well, thanks for asking, Dave, because I've taken some time over the last, actually few years to try to move away from, constantly talking about the problem. I mean, I've been looking at the monetary system since I actually was a kid, and I've spent a great deal of my life studying monetary history and what happens at the close of the age of empire and how cycles work and that type of thing. But I really started to focus more and more on what are the solutions. I'm more interested in not only defining the problem and looking at the financial solution, which basically means to exit the current financial paradigm, which usually involves, maybe a 10% allocation to gold and silver, not only in the physical metal itself, but perhaps in resource stocks or something along those lines. But there's so much more than that. I mean, that makes up part of the answer. Money alone, if you think money alone is the answer, then you're really not thinking very deeply.
Well, that's true. I just, of course, you can tell I read a lot, but they said all these studies that money doesn't make people more happy. It might provide more security or something, but it doesn't make them more happy.
Exactly. I recently interviewed a gentleman named Chris Martenson and Adam Taggart, who wrote a book called Prosper, and they talk about the 8 forms of capital, and they talk about, what I would consider from, my experience, what creates a happy life. And that is a balanced life. Whenever you're out of balance, you seem to have some kind of a stress situation. If you, we all need to eat, but let's look at it from both perspectives. If you undereat, you could be unhealthy, or if you overeat, you could be unhealthy. So there's a balance of about, for each of us, what's the right amount of, food, nutrition, et cetera, to be in balance. Same thing could be said of finances. I mean, at what point do you have enough? If you have, let's say, X amount, and X is sufficient for your lifestyle, what makes you quote unquote happy. If you double that, the idea in America used to be that, well, you have to be twice as happy. But all studies have shown that it's maybe a very slight marginal increase of happiness. Yeah. So what's the balance? And this is where I've devoted a lot of time and not a great deal of study. I've really been looking at it for the last few years. Actually started to do a proposal to do a conference in Las Vegas that talks about these issues, but there's like spiritual capital. There is capital with your community. There is living capital, which has to do with your health and what you can grow on your own, or material capital would be something like something that you make yourself or maybe buy and have available. So there's all these other aspects to the human condition that are outside of the financial capital moniker, that idea that, money alone. I mean, I used to be, and I'll admit it. I mean, when I was younger, the idea that, money would do everything, that's the answer to all problems. If you had enough money, you don't have problems. And, that's a very immature attitude. But, I'll be honest, I had it for a small portion of my life, and I discovered quite to the bottom of my soul that was a ridiculous idea. Life has the ability to come up and slap you alongside the head and wake you up and say, get with it. That's not true. So the balance idea, I think, is important, and the idea of what you can do. And I think one of the ones that we very seldom talk about, and maybe it's appropriate here or not, but I really want to voice it, and that's emotional capital. Emotional capital means being a mature adult. It means having the idea that the cavalry isn't coming to the rescue. It's the idea that the government isn't there to solve your problems. And as Reagan said, I'm not a big Reagan fan, by the way, but the government is here to help you is a non sequitur. They're not. So the idea that you have to be self-reliant, self-sufficient, you have to be able to use what you have, maybe make better use of it, use it up, reuse it, that type of thing. The idea of being frugal is starting to come back into our society, not so much because of the throwaway society has gone away. It's just it's not working. And people everywhere, in my opinion, have the idea that things are not working the way they think they should work. The banking system, the political system, even the food supply with the GMOs that a lot of people question. There's a lot of things out there in the public domain that are being questioned at this time, going back to our show in the beginning about the uncertainty. They're not certain about the food supply. You got the Fukushima question. I mean, is this stuff out of the ocean? Is it really good? Isn't it good? I mean, these are questions that you don't see too much in the mainstream. And that's why shows like yours are so vital to people. Not so much to give them the answers, although, you give me a direct question, if I can answer it, I will, but to get people to think. And I think really one of the most important things I've got out of this book, Prosper, is that you have to be able to critically think if you are going to have a quote unquote happier existence going forward, because the idea that someone else is going to solve your problem is a rather childish idea. In fact, the idea for me, and I'm apolitical, really, is that someone there is going to make the job market better. Where does it say that the president is responsible for the economy? Where does it say the president is responsible for what the unemployment record is? Where does it say the Fed is responsible for what the unemployment rate is? Janet Yellen, God bless her, but it's always data-driven. Well, if you're data-driven, you're always behind the power curve. You can't think, you can't lead, and you can't really implement anything worthwhile that might help you overcome the problem. If you're always data-driven, you're always behind the plow, not knowing which direction to go. And unfortunately, they admit that, but most people don't analyze it the way I do. Not that it makes me special, it just makes me show you critical thinking is really imperative in today's world, because, again, you've got to be able to sit down and realize the truth of the matter is that you are responsible for your finances. You're responsible for your health. You're responsible for what you put in your mouth. You're responsible for what comes out of your mouth. Ideas are very powerful things, and the idea that you can sit in front of the television and become, aware or awake is something that you've got to realize is a fallacy. You are being programmed, and we are in a generation now that has been programmed from birth to basically spew back what they've been taught via the mainstream media.
It's interesting. I'm reading through a book right now of Dietrich Bonhoeffer. And this guy was brilliant. His dad was like the smartest psychologist in Germany. He learned Spanish in one weekend. And he came to America, and he said, these people, he was taught logic, that you think logically. And he came to America and he said, these people here, they don't think logically. They don't have a basis to their thinking. And it just kind of blew him away, But that's what you're talking about.
Exactly. In fact, if you go back to, the economic school I adhere to, which is the Austrian school, von Mises basically was based on logic as well. And I try to do most of my economic theory in the same principles, because that's what's important. It's not, we can have opinions, and any opinions is valid as another one, really. Yes. What I don't like is people just spewing an opinion with absolutely no study whatsoever. Usually I form an opinion, not always, but usually I form an opinion. How do you form an opinion? Well, you look at both sides to begin with.
Yes.
When I do a political thing, which again, I'm pretty apolitical, but I look at the left, I look at the right, and usually I can find fallacies, not so much in the heart and the wish of the left, because a lot of them actually are very well-meaning, and their ideas for what they want to accomplish are pretty good. It's the implementation that most cases I find that they cannot be implemented in the manner they expect them to.
Right.
They think that something could rain from heaven and that's going to pay for it. That's not the real world.
Idealism doesn't work in the real world.
Right. It has to be implemented by sweat. There has to be some labor employed. But and I'm showing I'm tilting my political hand slightly, but I've tried to be objective on everything. So again, forming an opinion. So I want to just come back to the idea that, one, thanks for opening up the segment where we could get a broader view of what it means to be human. When I wrote the book, The Silver Manifesto, that you so graciously featured on your program last time I was in the studios, and that last chapter, Beyond Silver. And it comes full circle to this idea that there's a lot more to us as humans than our financial affairs, but money, the idea of financial freedom is I'm free if I have enough money. No, folks, there's a lot more to it than that.
Yeah, and a lot of it too is having gratitude and helping other people. Why, when you said, when we, the American dream is now I'm going to make twice as much money, therefore I'm going to be twice as happy. But studies show people that are have a heart of gratitude and actually help other people out, that makes them more fulfilling in life and happier.
Absolutely. In this book, Prosper, I referred to, Chris talks about having half the money and doubling his enjoyment of life.
Yeah. David, thanks so much for being on the radio show today. It's always good to see you, and thank you for your time.
Well, thank you.
We'll see you next week. Bye-bye.
The information contained herein is not intended to be and shall not constitute an offer to sell nor the solicitation of any offer to buy any security. Content is provided for information purposes only and is not to be treated as advice to make any specific investment. Please consult with an independent investment advisor before making an investment decision.